3 years me handling it for. Anusia.
Now that we have invoked divine blessings, I would request Professor Sahay to give the welcome address and start the proceedings of the conference. Professor Sahay is the chair of India Gold Policy Center at IIM Ahmedabad, professor of marketing and international business. His other teaching interests include fintech, digital media, and interestingly, neuroscience. Mention worthy that he is one of the few experts in the country on the interlinkage of neuroscience with management science, the chairman of the NSE Center of Behavioral Science at IIM Ahmedabad. His recent book, Brand and Brains, The Science of Getting Customers to Choose Your Company, is the toast of the domain. Sir?
So, first of all, thank you for coming here on a Monday morning, beginning of the week, April, 44 degrees over here in Delhi, I think. And we wanted to actually start getting back to meeting people in person, which is one of the reasons why we have organized this in a physical setting in Delhi. You must be aware that this is our 5th edition of the conference. Why do we have the conference every year? The idea is to provide a forum for exchange of ideas between IGPC, academia, and industry, to learn from one another and to be able to provide thought-based, research-based, relatively neutral and insight-based ideas for everyone. I think we learn from one another when we interact in this way. The past conferences have been at different places. We've had one in the AeroCity, one in India Habitat Center, one at KLMDC at IIM Ahmedabad. Of course, last year's was digital, and I'm really glad I can tell you to be doing this in a physical setting. From my experience as a teacher, the quality of the difference in the engagement and interaction online versus offline is quite substantial, very substantial. On digitally, our participants, students across all categories, whether it is PGPs, PGPX, managers that we interact with, unequivocally they have told us that the physical setting is better. Of course, in the initial days, everyone was happy. The students especially were happy. We don't need to be in front of the teacher, I guess. Now what has happened is, now that we are moving back, they're also happy because I think they have understood that there is much more value. So as we see the rise of various market infrastructure institutions, this conference is being held at an interesting point in time. The IFSCA has just set up the International Bullion Exchange. We have Mr. Ashok Gautam, the CEO and MD from there, today present with us to talk about that. And in this conference, we will learn about some of the other stuff that is happening, including the SEPA with United Arab Emirates, maybe a little bit about the FTA that has happened with Australia and the implications for gold and bullion overall. And we are really very happy to see the kind of response that we've had to the conference over the years, apart from the unstinting support of the World Gold Council, which has always been there. And I have to share with you that the World Gold Council, Som, Rocky, all the others, David, they have been very professional about the whole thing. One of the things I have noticed as an academic in India is that when somebody gives you money, they think they have bought you, कि आपको खरीद लिया है, right? In that sense, I think the World Gold Council has been very professional. They have been very clear that the money is for the industry, to promote the industry as a whole, and the thought process is that we can do a better job for the industry if you are independent, if you do research that is not reflecting the viewpoint of a refiner or a jeweler or the government or any other player that is involved with the industry. And so for that reason, I think we have now begun to earn the trust of the various stakeholders, because once different stakeholders understand that there is not an angle to the whole thing except to be able to improve the status, standing and the overall level of output, profitability, business thoughts, then it makes a huge difference. And on the academia front, possibly, we are talking about gold much more than earlier, and the idea is that with the current global macro-political events, geopolitical events which are happening, one can see a role for gold coming back into strong focus, even from a regulatory standpoint. If you examine very closely the accumulation of gold by countries like China and Russia over the last 10 years, some of that is now going to play out in the international financial system over the next 3, 6, 9 months as we see changes in the international financial system, and who knows, perhaps even a return to greater use of gold in currency management, in reserves management, and in the international financial system as a whole. One of my colleagues, Professor Sanket Mahapatra, who is sitting with us here today, he was the lead author on a piece of research which showed how countries which have accumulated more gold in their foreign exchange reserves have a better sovereign credit rating. They are perceived to be less risky by investors around the world. So we are in very interesting times. Perhaps the next 1, 2, 3 years might be a much better time for gold as an industry, and really nice time to be having this conference. Sudhish and I think we would like to thank you all. So in the political arena, there has been a talk of double engines. So IGPC has 2 engines. I think Sudhish is one of them. So Sudhish and I would like to be able to express our gratitude also to the sponsors of this event. This is the first time that we have actually gone for a sponsorship, and it is worthwhile to have got this sponsorship because we hold it as a non-profit event, essentially for the purpose of dissemination of information and exchange of ideas. So thank you again to SOM at the World Gold Council for their unending support, to Vikas at MMTC PAMP Limited, Sharad of Sequel Logistics, Mr. Sharad, for supporting us, and Shivanshu of MCX. Part of the support is for the purpose of giving awards to the research that is presented at this conference, and we will be doing that later. So I'm very thrilled to be announcing the winners of last year's Papers Award with Shivanshu later on in the day today. So thank you again. Welcome to the conference, and let's look. I'm looking forward to 2 days of interesting conversations, presentations, thoughts, ideas, new questions for research, and to help improve the status of the industry in terms of output, profitability, standing definitely. Thank you so much. Welcome again.
Thank you so much, sir. Due to some unforeseen compulsions, Dr. Shukla could not be present here today. I therefore request Professor Sahay to release the results of the nationwide household gold consumption survey, please.
Okay, so it is my pleasant duty to be sharing this with you. Let me share a little bit of the background of this particular piece of research. What we had been planning to do ever since IGPC was put together was to do a countrywide consumption survey. How do people actually buy, consume, pledge, sell gold at the individual level? Because ever since IGPC came together, we had seen that there are many viewpoints. The jewelers, some jewelers would tell us something, some other jewelers would tell us something else, refiners would tell us something else. And it was largely based on anecdotal evidence. This is my personal experience, and therefore I think that this is what is happening. And it was very difficult to form a picture at the level of the country or even at different states that was reflective of what consumers were actually doing from the mouth of the consumer itself. So this particular survey is essentially conducted on a nationwide basis, weighted by consumption. So if 40% of the 40% of the consumption is in the south of the country, 40% of the households have been sampled from the south of the country. And it was conducted between around, we started before the pandemic, then we had to hold it when the pandemic started. Then around September, October 2020, till about over a year is when the data has been collected, with a break in between when the second wave hit us in April and May last year. And we have a sampling frame that we call of more than 200,000 households. I think 217,000 households is approximately the number. From those 217,000 households, we have randomly selected 40,564 households, I think, and asked them a whole bunch of questions. When did you purchase? Why did you purchase? How did you purchase? How did you pay for it? Did you sell the gold? Did you pledge the gold? And so on. And this question was asked for the chief wage earner of the household, and where the chief wage earner was not available, excuse me, where the chief wage earner was not available, then the second person key decision maker in the household, and by and large it's mostly the chief wage earner. And that basically forms the backdrop to the findings that I'm going to share with you. The data was collected in collaboration with an organization called PRICE, People's Research for the Indian Consumer Economy. Rajesh Shukla is the gentleman who leads that, and we collaborated with them to be able to collect the data. As you can imagine, collecting data of this scale at the national level is not easy. You have to get permissions, especially during COVID, you have to get permissions from the local government, the functionaries, the authorities to be able to go out. You need to have people who are interviewing who will get good data. If some of us go out and ask a household out of the blue, you know, what is your consumption of gold? You are unlikely to get robust information. So the people who are out there in the field need to be selected carefully. They need to be familiar to the people so that the information is shared. We had to prepare letters, both from the local government, local authorities, from Ahmedabad, saying this is the purpose and you will be completely anonymous. So a whole bunch of stuff had to come together for this to happen, and finally we finished the data collection, I think around October, November of last year, and we have spent the last 2-3 months trying to analyze the information to get some preliminary insights. And the idea is that we will repeat this for at least 3 years, so that you have a snapshot over 3 years, which is based on actual information that consumers are providing us about gold consumption. It is not a jeweler telling us something, it is not a refiner telling us something, it is not the government telling us something, it is not a mint telling us something, it is not IGPC telling you something, it is the consumers, and we are simply the conduit for that information. So that's the backdrop to this particular survey that one is talking about, and the research results that we want to share with you. So those are some some of the survey objectives. I'm going to skip this part. We also talked about COVID-related damage. I mean, the data set is really rich. And if you guys have some questions that you would like to be answered from the data set, you know, I would invite you to come to us and say, you know what, we would like some answers to this question. It is a publicly available data set for the industry. It is not my data or somebody else's data. It is for the industry. So do please utilize the data as it exists with us. And as you can see, these are some of the questions that we asked. I shared with you the sampling frame, essentially 217,000 households, actual households 40,427. And what does the weighted households mean? So the 40,000 households that we actually sampled, we then scale it to the actual number of households in the country. The actual number of households is close to around 307 million households. On a population of 1,350, you have 307 million households. So approximately 4.5 people per household. And there is a technique to do that. We are happy to share that to those of you who are interested in figuring out how you scale from 40,427. Keep in mind that 40,427 is actually a very large sample. Yes, typically Gallup's, when they do an opinion poll in the US people say the truth more often than not. For presidential opinion polls on a population of 330 million, the sample size is 1,000 on a population of 330 million. And that is accurate to within plus minus 5%. you are of course depending on the people giving you accurate responses. So on a population of 1350 million, you don't need a sample size of more than 4,000 or 5,000 to be accurate to within plus minus 5%. But we have sampled 40,000 because India is such a diverse country. We wanted to be much more sure about what it is that we have found and what it is that we are saying. So these are the four things that I'm going to be talking primarily about in terms of the findings. How is the ownership, savings, purchase, and distribution of purchase and ownership kind of varying across the country? What is the form of ownership and the reasons for the ownership, the consumption pattern and purchasing influences, and selling and pledging. Please do keep in mind that this is a small subset of the data that we have collected. Each interview lasted like 45 minutes to 1 hour. So there's a whole bunch of information that's available. But for today, one just wants to share with you a limited amount, which is based around these four. So the first one, ownership, savings, purchase, and distribution of purchase and ownership. So if you look at this across households, right? This gives you the gold owned by households across different types of household. And as you can see, regardless of the nature of the household, whether you are earning more than 20 lakhs or whether you are earning less than 1 lakh, there is gold ownership across households. And as the interesting part about this whole thing is that where is the absolute volume of gold, right? Where is the absolute volume of gold? So the absolute volume of gold actually exists to the largest extent in the income bracket of 2 to 5 lakhs in terms of ownership. So even though these guys are buying small amounts, 5 grams, 10 grams, sometimes 1 gram, 2 grams, right? But the absolute volume of gold that is bought or owned, in this case owned, is actually the largest in the 2 to 5 lakhs. Now that's an interesting proposition for us because it allows you to segment the market, right? If I'm a Tanishq, I really don't want to be selling to this one. But if I'm a small jeweler in Lohgaon in Uttarakhand, it's an actual place, I've been there, then 2 to 5 lakhs is actually something that is the market for me, and I want to understand it better and I want to go for it a lot more. And savings behavior, of course, as it should be, it differs across income classes. For income classes that have annual income below 10 lakhs, savings is security, stable returns, and future of the family and kids. For income class above 10 lakhs, savings are gains over their extra earnings and so on. And higher the income, more is the risk-taking propensity, which is kind of intuitive. The interesting thing for me over here is that if you look at gold savings across income classes, the proportion of savings that is coming from gold at higher income ranges is a lot less, right? It goes up from 32% to almost 50% plus, but then comes down to 17% in the higher income classes. So again, an interesting thought to keep in mind from a psychological perspective. When people are buying gold as a proportion of how they think about gold for savings, it is much more important in the 2 to 10 lakh range. That is the modus of savings in a sense. The way in which people save, it's much higher for gold as a proportion in terms of how they think, which again has interesting implications for how I want to pitch my gold, jewelry, coins, bars to different categories. And if you look at the consumption of gold, it really wasn't affected by GST, and in the last 5 years, which is what we asked the question, at least 74% of the households confirmed buying of gold, and physical gold purchases by households between 2015 and 2020, as you can see, is much higher as compared to paper gold, so ETFs and other things by different categories. So despite the hype that people are buying digitally, much larger proportion is happening in terms of the actual physical gold. And cash continues to be the most preferred way to transact, with more than 90% of the transactions, not value, transactions, people confirming that they are using cash to buy gold. Of course, now you have to, above a certain amount, 50,000, you have to give your PAN card. And reconfirming that gold is across classes, the per capita consumption is highest amongst the rich, but the actual total volume will be rest with the middle income groups. So this is kind of a reconfirmation of something that we had just visited earlier. And in terms of the actual distribution of who favors it most amongst different classes across the years, so as you look at it across the years, you will find that you have between the 5 to 10 lakh range, the 2 to 10 lakh, 2 to 5 and 5 to 10 lakh range. Again, the range is relatively consistent across the years, right? Across the years, the maximum amount tends to be in the 2 to 10 lakh range, which in this particular chart is divided between 2 and 5 and 5 and 10. But that continues to be the largest one, consuming 56%. So what can be some implications for us? As an industry, when I'm talking to the government, what does the government tell us sometimes? The government tells us sometimes, gold is what they call as a luxury good, a demerit good. Actually, that's not true. If 56% of the consumption is in the range of income of 2 lakhs to 10 lakhs, how is it a luxury good or a demerit good? It's actually a very significant part of the savings of individuals. So that gives us a reason, a data-based reason to share with the policymakers, this is what it is. And, oh my God, you are wrong. Yes. Not easy to tell the government, because sometimes people who are sitting, and they are individuals who are sitting in the government, they tend to think that, they know it. But if the data is otherwise, ultimately they listen. They have to, they should, they must, otherwise we are all in trouble. And so therefore, some other implications as well, policy shift if you want to nudge to cashless transactions, right? How do you do that? It's an open question, we haven't yet answered it. It is a question that the industry should also be thinking about, because as we formalize as an economy, we do need to have a trail, right? Transaction trail, a transaction transparency. It also tells us that it will be easier to position digital gold or paper gold for higher income classes, which is kind of intuitive. And it gives a very clear segmentation approach for different kinds of jewelers and other people. So the second major thing that we have over here is, okay, who owns it and for what reason? Why do they buy the gold? Again, this has significant implications, as we shall see later. So who owns the gold? So if you look at the physical versus the paper, the dominant way of ownership of gold is physical gold. And this is true regardless of the kind of person that you are. So there's homogeneity in consumer preferences across geographical clusters. It doesn't matter which area of the country you are in, whether you are in a boom town, whether you are in a rest of urban, developed rural, emerging rural, underdeveloped. So by the way, these classifications are based on the way that the NCER and NSSO do the classification. So metro would be Delhi, Bombay and so on. Boom towns might be Jabalpur or Indore. Niche cities would be smaller ones, so Tiruchirappalli or Madurai and so on. Other urban, developed rural, places close to Delhi are developed rural. Emerging rural might be Rawatpur near Kanpur. And you have underdeveloped rural, so those would be others, places like Dhulia in Maharashtra and so on, or Bihar for that matter. So regardless of where you are, people prefer physical gold, and as you can see, the difference is not much. Yes, regardless of where you are in the country. And they don't necessarily prioritize savings and investment but purchasing jewelry. It belongs in a separate basket. A lot of people do not think about it as savings or investment per se. And if you look at the reasons, self-consumption, savings, investment, gifting purpose, religious purpose and others. So self-consumption is the largest across income categories, right? This is the self-consumption. Most people are buying it for self-consumption. What is self-consumption? So gifting for marriages, for example, might be self-consumption. Using it as jewelry for yourself is self-consumption. Savings and investment as a reason is not that high. Amongst the low one is also not high, and amongst the high income category also it's not that high. That's the savings and investment. So even though gold is a part of the savings it is not, the reason for that is not high, but interestingly, if you look at the numbers, right, about 65 to almost 87, 88 over here, 23% over here, and at the bottom end also it's about 65 to around 80, 15%. So that's significantly larger than earlier. One comparison that you can make over here is with the Tarun Ramadurai report. I don't know how many of you guys have been through the Tarun Ramadurai report. RBI had commissioned that study back in 2016, I think it was, when the report was released. And the Tarun Ramadurai report said that household savings are primarily driven by real estate, but 11% of it comes from gold, household savings. This is suggesting that the household savings in gold is kind of risen from that time. It is higher than 11%, right? Across the different categories, if you see, savings and investment, both combined, are higher than 11%. Why do people buy it? Is it productive use, possessional use, or intrinsic use? So those were the different questions that we asked. Returns, security, savings, value, investment tool, collateral, risk, acceptability, and so on. And if you classify those, so returns, if I'm buying it for returns, it's a productive use. If traditional value is kind of almost intrinsic. Possessional, I just like having that, collateral for availing a loan, that's a productive use. So if you look at the nature of the use, you will find that a lot of it has to do with productive use, right? Across income categories, most people are buying it for productive use, so far as value of the gold jewelry is concerned. Possessional and intrinsic use is a lot less. So what is productive use? Productive use is people are using it for returns, people are using it for investments, people are using it for savings. At least this is what they are telling us, even though there might be an emotional angle attached to it, but what they are telling us is that it's productive use. I would actually want to check this a little bit more using EEG and or fMRI to see what's happening inside here. So that's my neuroscience interest kind of speaking, because many times, I'm not saying that that's the case in this particular piece of research, but many times what people say is not what they are thinking or what they might be doing. So now we do have a way to check that, where we can put respondents with electrodes on their scalps, and as they are giving a response, one checks the brain activity that allows us to say what is it that's actually driving the choice, for example, between jewelry and coins, or what is it that is driving the what is the motivator? Is it savings or is it investment? Because different brain areas are responsible for different things. And of course, there is an element of symbol of success, or I want to show others how rich it is. I am, so there is an element of possessional and intrinsic value as well. So we tried to think of implications. Monetization scheme should be positioned as a value creator due to their affinity to gold for its productive value. It's an implication that kind of follows, because if most people are saying that the reason they look at gold is productive value, so something like gold monetization needs to focus over there. And it also gives us opportunities to structure gold by bundling physical with paper gold if the idea is returns. Implications for the kind of advertising that we do. So we have a gentleman over here who's from Vardhaman Jewels, who's part of the panel later, who's actually been doing research and collecting data that allows them to say what kind of message to use, right, based on the questions that they've asked. So some of this, of course, this is at a nationwide level, so those who are interested in going to different regions of the country, one could slice and dice this according to the region of the country and share the information with you. So that might help you to better target advertisements, if you will. Campaigns related to financialization, therefore, automatically, because that's the place where people are buying more digital gold. Next, what are the consumption patterns and what are the purchasing influences? How do actually people consume it, and what drives the purchasing? So as you can see, the weddings are still continue to be a primary part of it. Weddings and festivals taken together are 50 to 60% across categories, right? The interesting part to me, however, is not weddings and festivals across income categories. The interesting part is this green part. If you look at the green part, what is it telling you? No specific occasion, right? I'm not buying gold because of weddings. I'm not buying gold because of festivals. I'm not buying gold because of birthday or childbirth. There is no specific occasion. I'm just going out and buying gold. And if you look at it across income categories, this is approximately 25-30% at the top end of the income profile. In the 2 to 5 lakh, this is again between 70 and almost 97, 98, 30% again. At the bottom end, again, one suspects this might be insurance and so on. But clearly, it's not just weddings and festivals and birthdays and childbirth that is driving it. There is now a consumption of gold for no specific occasion. I'm consuming gold perhaps because I want the jewelry. I'm consuming gold for some other reason that we have not put up over here. Now again, this creates some interesting opportunities. If it is not for weddings, if it is not for festivals, if it is not for birthdays, if it is not for childbirth or anniversaries, what is it for? And how can I leverage that? If I am a jeweler especially, how do I leverage that? Gold purchases are also becoming routine expenditure for some. This kind of follows from what we saw in the previous slide. How am I doing on time? So this follows from the previous slide, which tells us that this is what is happening over here. So for example, self-consumption, the red bar is reflecting self-consumption without any specific occasion. It is for me. This is for me. So that has a direct implication on how I need to sell my gold. And of course, social networks are intertwined around. Brand play a major role and they play a major role in decision making. Interestingly, advertisements may influence the lower income group more, but the store brand matters a lot more for the higher income group. So from that perspective, therefore, what are some implications? I'm going to skip this one. What are some implications for policy and industry? Make gold jewelry into a normal activity, not large occasion related. This goes back to the no specific reason for consumption, right? If I can do that in my own area of consumption where people are buying gold from me, then I'm not dependent on weddings, I'm not dependent on anniversaries. It's a normal purchase thing, and I'm driving that as a jeweler in the area that I'm. Of course, this is a function of how I do some promotion, some marketing, and so on. Hallmarking could conceivably give more power to regional jewelers. If people are buying just like that, then hallmarking becomes an additional marketing tool. Yes, it's a regulatory thing that the regulator wants for their own reasons, but it becomes a marketing tool for me. It becomes a way to actually get people to buy gold, jewelry or otherwise for no particular reason. And of course, using the social networks, I don't need to say this to you, but this does also come out quite clearly. The last point that we have is selling and pledging. When do people sell and pledge gold? Excuse me. So here, if you look at it across income categories, and this is where the difference is stark, right? In all the other categories, ownership, drivers of purchase, how they purchase, where, and so on, the difference between the income categories is not really much. You could have seen that the difference is minimal. But here, in the selling and pledging, as you can see, the difference is quite substantial. The highest levels of physical gold sold happens in the 1 to 5 lakh range. As you go higher up the income brackets, you don't really see much of physical gold being sold. Similarly, that sold and pledged physical gold, you will see a much higher level in the 5 to 20. So this is not just sold but pledged. So higher income, so one of the implications over there is that higher income categories tend to pledge more rather than sell. Interestingly, if you look at, for those of you who follow, and maybe this is a piece of research that needs to be done, a reasonably significant proportion of the gold that is pledged with some NBFCs actually ends up getting sold by them. They are not redeemed, they are sold. So that perhaps is getting reflected to a little bit over here. Pledging of gold is a last resort. in the bottom 3 of the income class are wary about pledging, whereas the top 3 are more open to pledging, something that was coming through in the previous slide as well. And people don't go to it unless they really have to. So that also kind of comes through. And if you look at physical gold purchases in cash, the branded ones tend to have a significant proportion, but interestingly again the 2 to 5 and 5 to 10 lakh set in terms of income is much more focused on using the local jeweler as opposed to the branded jeweler. Now this is both an opportunity and a threat on both sides, depending on which side of the aisle you are on. And jewelry stores are the default destination to sell gold. Other things equal, by and large, I will go to the jewelry store if I want to sell my gold. And again, across income classes, this is true. It's true at the bottom, it's true at the top. And this, of course, is interesting because it then tells us what jewelers should be doing to continue this, because it provides a source of gold that might be more easily accessible. The interest cost and the security of the jewelry piece are the deterrents from pledging. So if you want people to pledge gold with you, need to look at what is the interest and what is the security, interest rate and what is the security. What are some of the underlying reasons? So there's lack of awareness, there's unaffordability, there's fear of fraud, and so on. So as you can see, overall we have a set of data and some preliminary analysis. Please let me re-emphasize that this is preliminary analysis, which is fairly rich and potentially has a huge bunch of insights that can help us to provide actionable recommendations to a whole bunch of stakeholders in the industry. Pledging, for example, can be considered as a monetizing activity. Electronic receipt of jewelry at bank lockers can become a strong sell to ensure security of jewelry pieces. And bringing transparency in the safety and auctioning system of pledged jewelry can help the process that we talked about. So I hope that gives you a flavor for what this piece of work was and why we did it. Just to kind of recapitulate some of the background and the highlights, nationwide survey, 40,400 households, sampling frame of 200,000. It's oversampled. Why? Because for a population of 330 million, you actually need no more than 4,000, 4,500 households or people to get a good random sample with a 5% accuracy, 95% accuracy, 5% error margin. We have sampled 40,000, so we needed only around 10 to 12,000 actually, but we have sampled close to 40,000, and it is weighted by consumption, so it is actually representative of the consumption in the country. More consumption in the south, so more households sampled over there. There is information about the reasons for the purchase, the nature of the purchase, the volume of the purchase, what they have used to purchase, cash, credit card, whatever else. There is information about sales, about pledging. And so it's a very rich data set that has many more insights which are available that we can actually share with you. And if you have some specific questions, we'd be happy to hear from you and to look at the data set and see what else we can do. So thank you very much for your attention. I hope that that sets the stage for many more such interactions and research. So for the record, we also want to do this for the next 2 years at least. And when we have a data set over 3 years, that will allow us to make many more robust and increasingly trend-based predictions as well. And this is the way in which it is moving and so on. Hanji.
Thank you very much, Professor Sahay. Excellent.
Hi, Chirag. How are you?
I'm good. Excellent set of data, something that we've been waiting for a year.
Yep, we've been waiting for a year to see this. So, congratulations to the IGPC team. I had, a couple of questions. One is, one very good chart which you showed up front was that income breakup, where 2 to 5 lakh rupees is where the maximum buying is happening. Do you have any color on how much of this would be rural, urban, and
Yes.
And something that we've been saying at Metals Focus, that probably it's not the farmers who are actually buying this gold. It's more of people who sell, various products to farmers or are related to farming are the ones who are buying this. That's one. And second question was, if productive use is the actual driving force behind buying, then why is it that ETFs and SGBs have not seen, that kind of traction?
So, for answer to the first question, we do have that information, even though that has not been presented over here, urban, rural, and this is a conversation that we can have. The second part, if the productive use is the key driver, why are we not seeing ETF and so on? So it's a question of customer behavior, right? Psychology, how they think. If on one hand, one is saying that productive use is a key driver, on the other hand, we do not see ETF, which is an easier way of making it a productive use. So that means there is something sitting in between, which is human psychology, which is preventing that transition. So that's hypothesis one. The second one is simply awareness of where it is available and how it makes it easier for me to. And the third one is availability, right? So those three, if you take together, I suspect are what is driving that. Some of that information should be available in the data set, but not all of it.
And to further explain on the rural-urban part, it was interesting to note that the urban consumption is actually taking up in value terms, is 65% of it is from urban, and completely breaks the conventional wisdom, the thoughts that rural is consuming most, right? So, and there are also various, if you have to further bifurcate, more insights on which are the kind of categories who are buying most within the urban. So that's one point.
So as researchers, we are, हम लोगों के सामने there is this very large plate of information and data, and we are trying to not dive into it too much, to consume it slowly so that we actually digest it and assimilate it before we bring it to you, so that we are able to share with you closer to the objective insight that is rather than just an opinion. So here, but it's there. A lot of it is there.
So looking at the people who are buying with no specific use, can we say that they are basically like those people who are consciously making an investment decision? Because if we look at the data, we had a higher number for gold coins comparing it with the jewelry. So could that lead to this?
So no specific consumption. I'm a little uncertain whether the data set itself shares with us what it is that is the no specific consumption. It could be young people going out and buying 14-carat jewelry, which is now again coming back into a little bit of fashion because it is being pushed fairly strongly by some jewelers. So that is the no specific consumption. It is just for self-consumption. Self-consumption, by the way, is a fairly large one, right? Now, self-consumption can be defined in many different ways. So let us see how it pans out, number one. Number two, I would like to understand actually from some of the jewelers who are present over here. What have they seen recently in terms of the purchase pattern that has emerged and how it has changed, let's say, over the last 4-5 years, especially over the last 2.5 years because of the pandemic, and whether that has changed anything.
So in terms of purchasing pattern, do we also have a pattern in terms of digital or banking payment versus cash payment?
Yes. Yes.
So how does that look like?
I will need to go back into the data and look at it, but if I remember right, the cash is still a significant proportion. At the higher income levels, there is a greater level of purchase of digital gold in terms of transactions, and some of it also has to do with the age and the nature of the household. But the absolute volume of gold which is being purchased, as you see through digital and ETFs and all of those, that's still fairly small. More than 60% is coming through jewelry, and around another 20% coins and bullion. Yeah.
So most of the transactions consumers are preferring through cash. So look at it, 90% of the consumers prefer cash as a mode of transaction to purchase gold, jewelry. Okay, and as you go up the income pyramid, it doesn't change much. It just drops to something like 83% or 80%. That's it. So, for some reasons, as you would have seen in various jewelry forums, when the AML thing was brought in, there was always this concern that consumers are wanting to buy in cash, and this is a behavioral thing. And what is it that at a policy level, when you start thinking of it, what is that we can do to get the consumers away from transacting cash? It's not the jeweler's mistakes, it's the consumers who want to that way. Ashish sir.
Good morning, sir. Ashish Pethe here. Your data said number of transactions are 80-85. But from my experience, the ticket size is much lower the cash transaction limit. If you look at it, that's why probably the data set is showing that 80-85% of the transactions are getting closed by cash. But as per my experience, the digital payments have substantially gone up in last 3-4 years. And in terms of value, today, if I may hazard a guess, across the industry, it is around 30-40% transaction in value terms are getting done through banking channels or digital channels. That is my sense.
It's very possible. Having said that, one has to qualify what you have said by looking at it from the perspective of how much of what you are saying is reflected from your personal experience and your network, and whether that network is representative of the sellers and the buyers. That would be one question that I would ask.
And second point, what Chirag Bhai was saying, that why has that profitable investment going into gold through other channels which are available? I think, Chirag Bhai, it has to do with financial literacy of the population. Because only financial literate people are open to investing through these financial products, which the general population is low on. So, and majorly whoever is investing, because of his low financial understanding of the markets, would prefer a physical. So, although he wants it for a profitable, his comfort is with the physical gold. That is my sense.
Interesting is all I can say, but I have not looked at the data deeply enough from that perspective to be able to give you a response.
I'm just giving you my sense why it could happen.
I hear you.
Sir, I have a question too. As the survey revealed that the urban part of the population is the real consumer now, it's increasing also, and as you rightly put that the 14-carat jewelry is also getting back into vogue. When you said that the survey was primarily talking to the chief wage earner, isn't the dynamics of the economy now changing with more women getting upholding that position with the man, and because of the fashion statement and everything getting into place, isn't that one of the reasons why the segment of that urban population comes into play, in the sense that the chief wage earner category is not more restricted to being the male, because the women are playing an equally important part?
Actually, the data is exactly the opposite.
Really?
The number of women in the workforce has dropped in the last 7 years.
Oh, wow.
It used to be, if I remember the number correctly, it used to be around 33-34% of potentially the working age group of females who was there in the workforce, and now that has dropped to around 24-25%. So the data is exactly the opposite.
Thank you, sir.
Professor, would you have...
Hello, Premnath here.
Hi, how are you?
Oh, good, thanks. Regarding exchange of jewelry, how much is the percentage of quantity of gold exchanged for jewelry? Have you, any research on that? Because in any jewelry shop, there are some quantity comes for giving that to jeweler and getting fresh jewelry, new jewelry.
Yeah.
On that. So whether this gold is considered as a cash transaction, because they may not be having invoices, or it would be you are treating it separately. Because I think substantial quantities, particularly when the prices are high, substantial quantity comes for exchange of jewelry also because prices are high at that time.
So the question that we asked had to do with how much where are you taking your gold for selling or exchanging or pledging. So jeweler is the primary place where it is happening. And we also kind of asked them what is it that they are doing with the gold that they are taking to the jeweler. Is it like for exchange or are they selling it and taking money? So those pieces of information are there in the data set.
Professor, just to build on what Ashish bhai said,
just
assuming that literacy levels are higher in an urban area as compared to rural, would there be data that you want to substantiate with that ETF and SGB consumption probably is higher in an urban area?
We can do that.
As compared to a...
We can do that. Minal, I hope you are taking some notes. Yeah.
So just trying to link the education and awareness levels between an urban area and the higher penetration of financial products vis-a-vis a rural area.
Yep, makes sense. Okay, so thank you very much for your patience, time and attention.